Alrighty, folks, it's about that time. We have a lot of companies set to report earnings this week, which means we have a busy video today. We're going to break down a bunch of companies, charts, earnings estimates, what I'm looking to do with these stocks. So if y'all find value, hit that like button, make sure to subscribe, and do not forget to get up to 16 stocks for MOMO, each up to $2,000. This promo is running out in a couple of days, so use that link down below or go to stocksurfest.com/MOMO, and each of those stocks could be valued up to $2,000. So get on it. Again, use that link, and now let's dive into it, guys. So at this point, you all probably know the stock market's been pretty volatile the past couple of days. On Friday alone, I mean, geez, guys, we had the VIX up almost 16%. We had the S&P down 0.5%. The Dow actually had a green day somehow. But other than that, we had the Russell down 0.8%. We had the NASDAQ down the worst out of the bunch, down 1.2%. And it looks like the metals, did the metals go up? Either way, gold's pushing 2,000 points again, and we have silver moving in the mid $20 range again. So yeah, I mean, there's a lot of fear, a lot of volatility, and stocks have been moving down. And no doubt about it, it looks like SPY right now is getting rejected at the 180 SMA on the 4-hour chart. Looks like we are continuing the downtrend, believe it or not, that we've been in on SPY, that we've been seeing pretty much for the past 2.5-3 months. You guys can see that here, and on Triple Q, it's pretty much the same thing. Let me show you guys this, right? We have a clear descending triangle. We've been making lower highs over the past couple of months. You guys know that, especially if you've been watching my content here. That's nothing new. We've covered this time and time again here on YouTube. So I don't want to focus too much on the indexes in this video. I want to focus on these 7 stocks that you guys see right here on my phone. Maybe you don't see them. You probably don't see them, but I'm going to talk about all these, all the estimates, earnings, EPS, revenue, all that good stuff. So let's just get into it with number 1, the first stock, which is Bank of America, ticker symbol BAC, which you guys probably know. We had a couple banks report on Friday. I think it was JP Morgan, Citi, I think, did Wells Fargo report? Let me double check. I think Wells Fargo did report. WFC, yeah, they reported on Friday. So this Friday, or not this Friday, this upcoming week, I believe on Monday or Tuesday, we have Bank of America, right? And this stock has not been doing well. The stock back in the beginning of the year was at $37. Then we had the whole, regional banking crisis back in the end of February, early March, which caused this stock to collapse. And it really has not recovered ever since. I mean, look, we're still in a downtrend. In fact, we hit a fresh low just a couple of days ago. About 10 days ago, we hit $25.47. Not the best sign. So we have earnings on, let's see here, looks like Tuesday morning, we have earnings for Bank of America. They're looking to do EPS of 81 cents, which comes in pretty much right in line with what they did last year. Actually, exactly in line with what they did last year. 81 cents is what they did last year. And as for revenue, guys, they're looking to do $25.14 billion versus the $23.57 billion. There's a freaking mosquito flying in front of me right now, guys, from last year. So revenue is looking to grow about 6.5% to 7% from last year, as again, EPS is pretty much going to be the same at 81 cents. That's based on these projections. Of course, guys, these are estimates, projections, whatever you want to call them, and nothing's guaranteed. This could come in at 90 cents for all we know. They could miss on revenue for all we know. But overall, Bank of America, Tuesday morning, watch out for them as they're still in a downtrend, which I'm not loving, to be honest, but I'm still keeping them on the watch list, right, guys? And now that I'm looking at this, we have an overall descending triangle on the 4-hour chart that's pretty much been building or forming, if you will, for the entire year here. So let's say they bomb earnings, who knows? This could maybe fall under 25.50, 26, which obviously would not be good for the bulls, and that would be the descending triangle playing out. That's kind of what I'm seeing right now, as the stock is not doing well, at least over the past couple of months, and we're under the 180 SMA, which is the main moving average that I'm looking at here on this time frame. So the next stock that I want to go over, guys, is Lockheed Martin, ticker symbol LMT, which you guys probably know. A lot of these defense stocks have been doing fairly well recently due to the conflict over in Palestine, right? Israel. We're not going to get into that in this video, but these stocks have been doing fairly well, right? It makes sense. I mean, this is kind of what we've seen when there's when we're on the brinks of a war, potentially, right? We've seen Lockheed Martin go up before, Raytheon, stocks like Palantir, other stocks like that as well. So LMT set to report, I believe, on Wednesday. Let me double check that. Actually, no. They're Tuesday, same day as Bank of America, and they're looking to do EPS of 667 versus the 671 from last year, so pretty much right in line with what they did last year, and revenue's looking to come in at $16.73 billion versus $16.65 billion from last year. Pretty much break even, up barely 0.5% year over year. So this is one that I'm not watching because of earnings. I mean, who knows what they're going to report, and it's probably already priced in. This is one that I'm watching mainly due to the conflict that's going on right now, as it could be one of those stocks. Well, it is. It's been catching fire, and it could be one that, well, could continue to build momentum to the upside, as now we're officially above the 50 and the 180 moving averages on the 4-hour chart for the first time in a couple of months, guys. So let's see if we could start. A big spot coming up is 450 to 455. So let's see if we could break out of there. I don't know if we're going to do that. Obviously, I'm not a fortune teller, but I'm going to set my alert at 450. I'll put another one at 455. Let me do that now. 450, guys. Mark is at or above. And I'll do another one at 455. Let's see if we can start pushing above those points. If so, all right, maybe we do get even more upside. Maybe the momentum does continue. But until then, I'm personally going to just sit on my hands, play it safe, and let the earnings come out and see where it goes from that point. We also have United Airlines set to report. UAL is the ticker, which this stock, my goodness, has not been doing well either. None of these stocks that we've covered have been doing well the past couple of weeks/months. And UAL, believe it or not, was at $58 back in the end of July. Now it's at $38. Earnings are expected to come in on Wednesday morning, and the stock's already down about 35% heading into earnings, and their earnings estimates are pretty good for EPS and revenue. Listen to this, guys. EPS estimate is $3.35 versus the $2.81 from last year. So that's going to be growing year over year on the EPS side of things. And when it comes to revenue, that's coming in at projected $14.44 billion versus the $12.75 billion from last year. That's up 13% projected year over year. And again, the crazy thing is it's down 35%, and we just took out the lows from the beginning of April. So to be honest, guys, this could be setting up for a rally. I'm not saying for sure. Earnings have to come out, obviously, but it's so beaten down heading into earnings. This could be setting up for maybe a relief rally. That's if the earnings, EPS, revenue is better than expected. Maybe guidance is strong, or maybe we get something that's not expected overall from the report. Don't be surprised if we do get some sort of relief rally on UAL now, especially as we're pretty oversold. We just hit a fresh low on Friday, guys. I mean, come on. This thing's going to get a rally at some point, whether it's before or after earnings. I'm not in this stock. I'm not gambling before earnings. I hate trading before earnings, guys, or buying and holding and praying through earnings. I don't like doing that. But I'm going to be watching it regardless. UAL, PG is another one that I'm looking at this week, guys. And you guessed it, this has not been doing well either, and it's holding above 140 to 145 right now by a thread. That was actually the low from the end of May, and you guys can see, well, you can't see, I'll read it to you. It's on my phone here, guys. EPS is looking to come in at 172 versus the $1.57 from last year, so that will be growing year over year. That's pretty good. And when it comes to revenue, $21.6 billion versus $20.33 billion from last year. That's projected to be up 6.2% year over year for Procter. And kind of like what I said with UAL, this is pretty beaten down heading into earnings. We're oversold. We're already down about $15 into earnings, down about 9%. So maybe if these earnings are better than expected, we could get some sort of rally on PG. But the second it falls through this point right here, guys, being 140, there's probably going to be downside, probably down to 135. And if that breaks, man, it could get even worse from that point. So let me set my alert. 140, mark is at or below. And then I'll put another one at maybe 145. Mark is at or above. We'll see if it's able to break out of there. So before we break down the last 3 stocks, guys, do not forget to get up to 16 stocks for MOMO, each up to $2,000. Listen up. All you have to do is use that link down below, open up your account, and fund it with your initial $100 deposit. You get 5 stocks right off the bat when you do that. And if you fund your account at least $1,000, you get 10 more stocks, totaling 15 stocks, guys, each of which could be valued up to $2,000. And if you want some more money, why not? You want some more stocks, fund your account at least $5,000 on top of those 15 stocks for a limited time. You actually have 4 or 5 more days to do that. You get another free share of either Google stock or Tesla stock, which, come on, guys, makes this promo a no-brainer. So use that link down below or go to stocksurfs.com/MOMO. Get your stocks, and full disclosure, that is an affiliate link. It helps out the channel. And with that being said, let's talk about the next name here, the next stock, which is something that you guys probably use on maybe not a daily basis, but you probably use it every single week. It is Netflix. And by the way, if you hear some crazy noises back there, I'm not sure if you can even hear it, but the dishwasher here in the Airbnb, and by the way, I'm in Italy right now on the honeymoon. If you guys didn't know that, we're currently in Positano. We're leaving in 2 days. But if you hear that loud freaking dishwasher, you know what it is. It's a dishwasher, and, you know, it's freaking loud as heck. Either way, we got to get the dishes clean here, guys. And, yeah, just a little warning. That's what you're hearing in the background if you are hearing it. So Netflix is a huge, huge company that I'm looking at, which is actually fairly oversold as well, heading into earnings. And we're actually at a multi-month low right now on Netflix. The last time it was in the mid-300s, guys, was back in the middle to the end of May of this year, which is nuts. So earnings are on Wednesday, I believe. Yeah, Wednesday the 18th. On Netflix, they're looking to do EPS of $3.49 versus $3.10 from last year, and revenue is looking to come in at $8.54 billion versus $7.84 billion from last year, up 9% year over year. So Netflix is projected to grow, guys, revenue and EPS pretty nicely. And sure, we've seen better revenue growth numbers, EPS growth numbers in the past, but, you know, considering a lot of these growth companies, their growth has slowed down. 9% for Netflix, to be honest, man, I'll take it. Not too bad, not too shabby if you ask me. And the charts on the flip side are not looking so good, right? We have a clear downtrend on the 4-hour chart. We have a death cross here. We're under the moving averages. Like I said, we're at a multi-month low. So maybe we get a relief rally if earnings are better than expected. We're at 350 right now, which was the high from back in, it looks like, the beginning of April, mid-April. So maybe we, you know, see a pop here. Some buyers come in before earnings, totally possible. But for now, guys, I'm not in this. I'm watching it, though, and I'm probably going to play it after earnings. Like I said, I don't like buying or selling, or maybe not selling, but I don't like buying and gambling through earnings, but we'll keep an eye on it. NFLX, as they're set to report on Wednesday, and the next stock here is ATMT, ticker symbol T. This stock has been destroyed, guys. Talk about an abomination. I mean, this thing was at 35 or 25 a couple of years ago. Now it's at 14. It's in a downtrend. It's not seen any really green at all this entire year. So AT&T is set to report, I believe, on Thursday. Yeah, Thursday in the morning. They're looking to do EPS of 62 cents versus 68 cents from last year. So that's going to be declining. And revenue's projected to come in at $30.19 billion versus $29.84 billion from last year, up 1.1% year over year, guys. So AT&T, not bad on the revenue side of things, pretty much flat year over year, but EPS is projected to come down from last year, and the stock is, like I said, clearly in a downtrend. All these stocks today, guys, are not looking good at all, based on the charts at least that we're talking about. And who knows, man, maybe if AT&T starts reversing above, let's say 15, 16, it could be due for a relief rally or maybe some more, you know, upside from there. But until then, guys, I'm not looking to touch this thing with a 10-foot pole. The only reason why I'm covering it is because they're projected to report earnings, and, you know, it's earnings season. We have to cover all these stocks and watch them all. And if you guys like this type of content where we break down earnings, charts. We talk about what's going on in the markets. Make sure to subscribe. Hit that notification bell. It's free. And feel free to follow me on X, formerly known as Twitter, at Stocks Talk Stocks. That's linked down below. That's also free. You might as well. And the last stock for the video, ladies and gentlemen, is American Airlines, ticker symbol AAL, which, my goodness, guys, this might be the worst of them all. This thing's completely falling. It's in free fall mode. And based on the price action from last week, we're officially under the lows from a couple of weeks ago, being about $12, $12.50, and from back in the end of April where we hit about $12.75, $13. So this is now officially at a 4-hour, it's at a low on the 4-hour chart. It's down about 39% from the recent highs. And on the 3-year chart, you guys can see now we're approaching the moment of truth, right? Do you guys see what I'm looking at here? We have a clear descending triangle on the 3-year chart. Let me show you guys this. And we can see support being about 1150, 12, 1250 in that range. But at the same time, we've been making lower highs over the past couple of years. So if this thing falls under $11, $12, which actually it's already under $12, but if it falls under 11, this could be going to the single digits, especially if they bomb on earnings. Who knows? They're looking to do EPS of 25 cents versus, get ready for this, 69 cents from last year. So EPS will be declining a good chunk year over year. And same with, actually, no, not same with revenue. I was about to say same with revenue, but revenue is looking to come in at $13.51 billion versus, what is it, $13.46 from last year, pretty much right in line. But EPS, man, it's getting worse and worse and worse. And, you know, it's not something, it's not a stock that I'm loving here on the charts for sure. Really, none of these are. None of these are that we talked about today, but we just had to cover them, obviously, because, you know, earnings season is here, and these are the biggest companies, some of the biggest companies at least, that are set to report. So what do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe, and do not forget to get up to 16 stocks for MOMO. Link down below. Follow me on Twitter. Make sure to subscribe here on YouTube, and I'll catch you guys later.